In this video, I'm going to be showing you a scalping session of a price action trader. The candles on the chart for your price action is indicating right now quite a strong bullish uptrend working higher. The EMA is pointing up, and my goal as a trader is to always identify the right channel. So the only good channel that I see as of right now is this channel right here with a little early break. Sometimes that can happen. The early break is not going to be counted. It fits pretty well here, right here as well. You can see a lot of small bars trending higher. So I'm going to be adjusting the channel, looking for the best fitting channel because this is where the news were announced. So it can distort the price action a little bit. But as of right now, we can see price action working to the upside. So I'm not even thinking about selling. Okay, the uptrend needs to get new high. We have a new high, first entry long, but we have micro double top, which resets the count. So technically this is first entry long again. Because it is technically first entry long and we're not with EMA, I waited. The uptrend had a break new extreme. We had a strong push below EMA and a failed second entry long reversal pattern that resulted into market reversing down. The market was a little bit too bullish for me to pull the trigger straight on the reversal this early. But right now we can see we broke the important key level. It didn't hold into a breakout pullback. The downtrend is working lower, so I'm looking for a decent channel. You can see I'm connecting the swings at the top. We're getting bounces at the bottom, so I'm going to be watching for some decent short entry. The bullish pullback was a little bit stronger than I expected. There was absolutely no rejection, but the downtrend still needs to get new extreme. So if we're going to form failed second entry long below EMA, that would be considered a bullish trap because the downtrend is new low. Bullish correction played out. It is below EMA, so I would consider selling the bullish trap, anticipating the new extreme. Alright traders, I'm recording a video as I entered a second entry short. We got filled quite quickly. We have a new low, first entry short, second entry short. The single bar didn't end fully bearish, so I dropped my limit order 2 ticks back due to the tail at the bottom. But the downtrend still needs new low. We have a new low, first entry short, second entry short at the EMA. Even the small channel needs new extreme. Okay, we got filled. There was a second entry long fill, but it was too far from the EMA, way too far down, so I couldn't have entered. And we had the second chance to enter new low, first entry short, second entry short, two-legged pullback at the EMA. So we established the trend down, uptrend played out, strong push below EMA confirmed the sellers want to see new extreme, and you can see I'm utilizing the trend line rule, predicting where the channel is going to be, connecting the very first swings at the top. You can see market geometry allowing me to identify the channel, break a new extreme indicating end for the bulls, push below EMA. So I'm just analyzing every single step by step what the price action is telling me. Mini new low, first entry short, pullback, second entry short. You can draw micro short-term channel and you will see you have massive overshoot. So for this reason, this is a sign that the sellers will push market lower, but there are so many reasons to expect new low. We actually have micro double bottom, so I'm still going to be holding the runner in case we make one more push down, and I'm going to be trailing the runner eventually. Right here, so I'm trailing the runner to around 5 points because we have a 2 legs to new extreme. So there's a big chance we can have correction, first leg down, second leg down. So I selected this swing in case market is going to reverse, so I can at least lock some partial profit. But we got stopped, and this was a second entry short with 5-point runner. So now that we have 2 legs down, I'm not looking to sell because downtrend played out. And at the same time, I'm not really looking to go long just yet in no man's land where there is no key entry point. So after breaking new extreme, we can enter a brand new market cycle, correction phase or reversal. So I'm being a little bit more patient. I need more price action. I need brand new key entry point to be established. And this is kind of what I'm looking for. I always want to see the price action establish its trend and the bias. So I know that I'm not guessing, and I'm just trying to compare all the factors and make sure that all price action rules align. And only if everything aligns, that's going to be what creates a high probability setup. So right now, breaking low, I'm waiting for more price action. Alright, traders, quickly resuming the video as there was beautiful setup, which I was too slow to react. It formed very quickly because notice we have a break new extreme, market enters a consolidation. There was actually prior to that high low, new high, first entry long, second entry long, push above EMA, uptrend is new high, great high low. But market was just deciding the structure. However, once we have a break new high, strong push below EMA, the downtrend is new low, and we have a new low, first entry short, pullback, second entry short at the EMA, big tier 1 signal bar, great setup. So you can see every single time we just follow the trend line rule, uptrend break new high, downtrend break new low. So it's a great setup. I'm a little bit bummed I missed it. It happened so fast, I didn't decide on time. So we have uptrend working higher. I'm looking for 2-legged pullback, but there is no break higher. So we have new high, only first entry long, possibly here. So I'm going to be waiting if we can get legitimate second entry long to get a new high following the trendline rule. So the market quickly turned down after break new high. There was no second entry long. Now I'm thinking about second entry short at the EMA for new low of this channel, and I redrew back the wider channel as well. The second entry short didn't form at the EMA. It was way too far down. Bad bullish bar. Now we have almost triple test, but once again bullish bar again. I don't want to sell below bull bar, so there can be potentially another mini second entry short, but let's see if it's gonna happen. Alright, so another second entry short is very tempting. I was hoping it would form much higher, closer to the resistance. We are in the middle of this consolidation. I still think it will work because we need new low for this channel, new low for this channel, but 3.25 is the bar, 3.5 point stop loss. You know, had it closed a little bit higher, I would have considered. I came back from my break. There was a nice uptrend being established. However, there were only first entries or second entry that are very sketchy. There was no clean, good second entry long. So the uptrend is quite decent. Confirm we have a first break close outside this channel. So I'm going to be respecting this correction. But my main focus is to expect a good setup because we need to get new high first for this uptrend. And then potentially I would be focusing on the trend range. Right, traders, so I was getting ready to take this beautiful new low, first entry short, pullback, second entry short, triple test. But as you can see, there was no break below this bearish bar. It stalled with an inside bar, so I canceled the limit order. And now I can see that the price action is working lower. So this is a shame it didn't trigger into a nice technical second entry short. It just stalled with an inside bar. But the range rules took over. Bearish reversal, new low, first entry short, second entry short. Couldn't get more cleaner to like a pullback, break a new extreme of the uptrend, and also triple test forming. So unfortunately, perfect context, but I just couldn't enter because it didn't trigger below the bear bar. Alright traders, I'm gonna wrap it up with my one single trade. So this right here is the overall structure for today. Last few days, the price action has been very predictable in the trendline rule, applied almost everywhere, even today, apart from one channel where the trend range took over. We started with the failed second entry long, which was also second entry short. The reason why it is more aggressive is because this bullish trend was quite strong. There was a small break new high indicating the trend line rule played out. Then there was the downtrend that was wider developed, break new extreme. There was a great high low. Because you have a break new low, we can expect correction to be wider, trend to be wider because the main bearish trend played out, so the stronger bullish momentum may appear. Second entry long was below EMA, push above EMA and a great high low following the trend line rule, which it played out with the break. Move to new extreme, and once you can see EMA flattening, this is where I was playing the sideways market because we have prices swinging up and down, up and down. New high indicating depletion, break below EMA, great textbook second entry short, and eventually the trend down was so weak that we keep creating lower highs and lower lows. There was decent failed second entry short, but you need to be way more advanced because at this point, every single high and low is lower and lower. Now, when the downtrend is weak, this means the correction phase is stronger and it looks like a trend range tilted down. So you definitely cannot be taking setups at the bottom of the push phase. The second entry short didn't even trigger below bear bar anyway, but because it is a bit too stacked, it is way more advanced. And then even though price session was predictable, break new high, downtrend working lower, break, a large to like a pullback, triple test, it just didn't form with the great signal bar. I cannot sell below bull bar. Had there been a nice bearish bar, it would have been great setup. Why? Because this downtrend needs to get new extreme, market reverse. I don't really like taking any setup inside of this wedgie formation congestion. This is the only channel that didn't get new extreme tested, but that's because the overall trend range took over. So I'm not going to argue with the market. I'm going to pay attention how deep this retracement is, and you can see we retraced the majority of this uptrend, over 50%, 60%. So I'm going to adapt. Why the channel fit really well, and this was textbook second entry short triple test to finish the day with. Unfortunately, there was no trigger, there was an inside bar, and the market is about to close. Monday is trading holiday next week, so I may not make a video because market is going to be closed. So I hope you had a good trading day. I'm gonna wrap it up, and I'm gonna talk to you next time. Good luck with your trading.